Hi, welcome to the Market Alert for Tuesday, the 26th of March 2019. So not a lot of activity on the pound yesterday, and I've been thinking about this. There seems to be some sort of manipulation going on. I mean, when you see headlines like this, where the Commons gives itself the chance to take control of Brexit, which means that Mrs May and her cabinet have lost complete control of the farce that is Brexit, it just seems very strange that we have this narrow trading range in the pound. I wonder if the central bank is participating here and helping to give some sort of stability to it, because it's very strange activity, something that's bordering on a constitutional crisis, and the pound is as steady as you like. It just doesn't make any sense at all, unless they can see that there won't be any Brexit, particularly now the Commons have taken over and they're going to have all sorts of votes. I think there's 7 votes about different options going forward over the next few days. If that is to be the case, then maybe that's what's holding it. But it's very, very strange, I have to say, in what it's doing at the moment. Yesterday, you can see how narrow the range was. Above the 200 bar moving average, but sideways. And then when you look at the bigger picture, even more so, over the last 24 hours, really quiet range for something where, in my opinion, this should be falling out of bed at the moment, in line with what is happening in Parliament, where it's an absolute farce and uncertainty and everything else, and yet the pound stays higher. It's just very strange. News-wise today, nothing. Even the CB confidence, consumer confidence, won't make any difference because the market is currently dominated by the yield curve, which we'll have a look at here. This is the 10-year of the 3-month against the 10-year. This is the one that's looked at and used for recession indicator. Given the last 10 years, of course, I mean, you can see here how well this indicator has worked, and we are below this line now. I'll come to that in just a second. It makes you wonder whether there's not going to be some sort of manipulation here again from the Fed to this time it's different, and they will do whatever they can to make sure that there isn't a recession. The other thing to keep in mind with this also is that, as I said yesterday, it's an average of 300 days a year to 2 years, as you can see from here. It doesn't happen immediately. The recession can follow later on. But what's important is when it dips into these areas, then a recession does follow at some point. It's not immediate, but it's something that we will keep an eye on in the alert. And yesterday we see the 3-month 10-year spread drop again, new low there at minus 6.843 for this market, having dropped below zero on Friday, which you can see here, and then managed to get above it yesterday, 8 o'clock, around 8 a.m. in New York, and then the market dropping off there once more. So the reaction for the Dow yesterday, if we can look at the daily chart first, we see the market being pulled back by the Plunge Protection Team and corporate buybacks, derivatives, as it said in a Bloomberg article. Anything to keep the market up. The market also came back to the 76% retracement, which is why we drew it in. The market's also above the 50 bar moving average. Has it got the oomph to move prices to the upside? Well, only time will tell. So I'm going to remove these two 76% retracements, and I'm going to go from the top to here and watch this level here. This is going to be a really important level. If the market can't close above 25,913, let's use 26,000 as the psychological level as well, then the market is going to struggle. So keep an eye on this one, very important on the upside, just as this was important on the downside with the 200 bar moving average lying just below there. So yesterday, a bit of volatility once the market opened. Obviously the yield curve relationship, the 3 to 10 year, is playing on the market because of the accuracy, I suppose, of the indicator, causing a few alarm bells, and then we see the market moving lower. Eventually it finds some support. We had a sell signal there that failed, followed by a buy signal that saw the market move over 200 points. Following this, after the market's already dropped 150 It is going to find some sort of support, and you've got buying pressure coming into the market here. Double bottom retracement there and test, and then also you'll see the market reverse and then move higher. And then later on in the session, we had a bounce off the 200 bar moving average. We moved up for a while to the top of the trend line that's there, and then the market closing back below the 20 bar, the 50 bar, and then eventually the 200, before we get the obligatory pattern that we've had for the last 10 years that happens more often than not. We see the plunge protection team come in and bring the market back, and normal service has resumed. You can see they're above all of the averages on the overnight until this bar here, where we see a bit of selling early on this morning at 6:15. Buying pressures in, and the market starting to move back to the upside. So watch this level here, very important if you get any move to the upside. In the downside, if you take out the 76% retracement, you need to take out yesterday's low in the low of this test bar, because this is where the buying came in, which we saw just over here. Let me just bring this back for you. Just over here, first part of the trading session in this area here, you can see where the buying came in, and then we came down and had another look at it here, which is, if I just grab this from here up to here, you will see that we're in the 76% retracement area, and I'll just do that again, remove the to there, and you'll see how the market came down to the 76% area and then immediately reversed and closed back through, and assisted by the plunge protection, the market moved back to the upside there. Meanwhile, in Bitcoin, down yesterday, a bit of a pullback in this market, but still very, very quiet, and still churning sideways at the moment. No reason to really devote any more time on this one, because it's not moving too far or doing an awful lot at the moment. The only thing it's done is break out of that sideways move there, which you can see here. Okay, that will do it for this one. Let's see what farce we have today down in Parliament. So keep an eye on the pound. It may come to life, but blimey, it's very quiet at the moment, and for me, highly suspicious. This is just not right, given the, as I say, the complete and utter joke that's going on down in London. I don't know, it's just bizarre. I mean, really, it should be falling out of bed, but it's not. Also, the Dow, they've only got the one economic news item today. Tuesdays can be quiet, but also one direction. And Bitcoin, well, it's not going to do a lot until it breaks out and things start falling apart in other sectors, where that one will come back to life. Still in the consolidation phase. Okay, that will do it. As ever, thanks for watching. See you in the next one.